Good morning or good afternoon for those of you joining us from different time zones. My name is Joe Schembri. I'm from TradeMalta. Today is the last of our series of webinars, or this series of webinars. We've had a season of very interesting discussions. Today, we're discussing a report and a survey done by HSBC International on turbulence and building resilience in organizations when facing an environment which is constantly changing. This is very interesting. It has some very interesting results that are applicable to companies in Malta, and this is the discussion we have today. Just before I introduce the guests we have with us today, both from London and here in the studio, I'd like to remind you of just some housekeeping rules as always. We will start this discussion in the studio. We have our special guest doing a presentation for about 15 minutes. Following that, I will be asking some questions to the guests I have here in the studio, and immediately after, you will take your questions as participants. So I'll remind you, please send us questions, comments, observations through the chat function of Microsoft Teams. I will be reading these questions to the guests immediately after at around noon or about 50 or 60 minutes from the start of this webinar. So as always, this webinar and all the others are available and will be available soon on the TradeMalta website, so trademalta.org. You'll find information on what we do as TradeMalta, but also the recorded sessions of all these 5 webinars we've had this time and the 5 others we've had in the period of March and May before that. So let's introduce the guest. Today it's a great honor to have from the HSBC head office, Mr. Warwick Long, who is the head of commercial banking at HSBC, Europe and the UK. So Warwick, thanks for finding time to be with us this morning. Warwick will be with us both for the main presentation and also for the panel discussion, and also to take your questions when you send them through the chat function. Here in the studio, I have Joyce Grech, who is the head of commercial banking at HSBC in Malta. So Joyce, thank you for finding time to be with us today, and JP Fabri, who's the founder of Seed Consultancy, which is an economics advisory firm in Malta. Those are our guests. The first item on our agenda is the presentation of this very interesting report and survey done by HSBC. So I'll hand over to Warwick for this presentation, which will take about 15 minutes or a bit more, following which we'll have some more questions. Warwick.
Thanks, Joe. So I'm honoured to be with you here today. I join you from a rather cold and drizzly UK, where we're in the midst of a countrywide lockdown due to COVID. So it's wonderful to be talking to you, whether you're in Malta or elsewhere, and it distracts me from what's going on outside my window. So I'm based in the UK. As Joe said, I lead our UK business, and I also oversee a number of countries within Europe, within which Malta is a very important market for us. I recently moved back to the UK from being based in Jersey, in the Channel Islands. So I feel I've got a good appreciation of island life, albeit the economies are very different, of course, to Malta. So some background and context to the report that I'm going to go through with you. So HSBC's Commercial Banking Navigator report is called Building Back Better, draws from a survey of over 2,600 companies across 14 countries and territories. And it includes 400 from Europe, principally France and Germany. The survey was conducted in late April, early May this year, so a health warning. It is now a few months old, but the insight I'm sure that we've got will be of real interest to you and remains current in many ways, given that we remain in the grips of a global pandemic, which is having far-reaching implications for economies, business, and of course, consumers. Now, we are launching our larger annual report in early December, and I've arranged for everyone to receive a copy of that when it's released. And to give you some more context, of those surveys, and I said it was 2,600 companies globally, 62% were international, 38% domestic. 47% were engaged in services and 53% in non-services. And the report considers, as Joe said, the actions taken by businesses to weather the crisis and how they're shaping to the new normal to seize emerging business opportunities. And the slides that I'll go through are a condensed version of the full report. I won't talk to each of the points because you can read those, but I will pull out key points and provide some deeper insight into the findings. So if we can go to the first slide, please. Okay, so I hope you can see the first slide. Not showing on my screen, but hopefully you can see it. It won't come as a surprise. Businesses around the world are facing the greatest challenge in a generation. Nearly all, and this is 98% of businesses surveys, have felt the impact of COVID-19. And the impact has been strongly felt by more than 2/3 and strongly by a quarter. Now, more than a quarter are operating as normal, but sadly, just in 1 in 10 have partially suspended trading and 5% ceased operation completely. So clearly very, very impactful. And if we look at sectors and into Europe, automotive, wholesale, and retail have been the most acutely impacted. And the impact does naturally differ by market. So across Europe, 85% of French firms felt strongly impacted, but only 53% of those in Germany felt the same. And that's the lowest proportion for any of the markets, any of the 14 markets that we covered, and perhaps reflects the German government's effective containment strategy. But it also made down to the preparations of businesses themselves. 9 in 10 German companies that were surveyed felt they were prepared to some extent for the challenges that COVID has brought, compared to 80% in France, 8 in 10 in France. And it's because firms in both countries have been taking action over the last couple of years to increase their agility and their resilience. And both of those themes I'll come back to and are a key element of the findings. The report does show that they'll conclude that there's no real blueprint for navigating crisis, but the resilience is multifaceted. Yes, you need a strong financial foundation, but the data suggests firms are adapting to new ways of working to better serve customers. And many are prioritizing a changing culture to become more agile. And acting sustainably is also key, and I'll talk specifically to sustainability. So if we can move to the next slide, please. Okay, so looking at the impact of COVID, companies around the world are making significant operational changes to build back better and become more resilient after many found their contingency plans were not robust enough to cope with the pandemic. Almost 2/3 have modified their operations, and this again is late April, May. Nearly half will change their products and services, either by diversifying or reducing their offering to become more specialized. So again, if we look at sectors, perhaps unsurprisingly due to the lockdowns, and I said we're actually in a lockdown in the UK at the moment, the wholesale and retail sector is struggling. 43% admit that business health is threatened or challenged, and it's far above the average. 6 in 10 of retail businesses believe they either could have done more to prepare or were not prepared at all. Now, I won't dwell on the GDP forecast. This is from July, and it was HSBC's forecast at that time. Just to give you a brief update, but I know JP is going to talk to that. The latest world view from HSBC for 2020 is GDP negative 4.2%, and for 2021, positive 4.4%. So down a little bit from what's on the slide. And in Europe, we're projecting negative 7.5% for 2020 and positive 4.5% for 2021. Again, down from what is on the slide. Now, business leaders have been faced with multiple considerations that need a new solution. The greatest impacts, as you can see, are changes to production and office locations, changes to products and services, and access to key trading markets. And linked to this are changes in customer demand, where around half of firms have moved their business online. So if we could move to the next slide, please. Now here we're talking about resilience. And rarely have businesses needed to be as resilient as they have needed to be during 2020. And it's a key factor in both future growth and increasingly a measure of value amongst investors. Now, the importance of a strong balance sheet and efficient working capital were named by 13% as a top priority. Specific actions businesses have taken to consolidate or strengthen their financial position, including ensuring they have sufficient cash flow, sufficient business reserves, financial reserves, reducing their cost base and reducing their debt level. Now, just as important, and particularly as we move into 2021, is the climb to recovery, given that historically failure rates tend to rise in the recovery phase. So there's a need to plan ahead and actively seek new customers. Now, nearly 60% of businesses have been spending more time on short-term planning naturally, but it's positive to see that 42% felt they're able to focus on the long-term or both long-term and short-term. And interestingly, businesses have been strengthened. Business connections have been strengthened, which suggests businesses have successfully navigated the impact of being remote, in many instances for employees, from customers, and from suppliers. So if we could move to the next slide, please. So a familiar phrase, culture eats strategy for breakfast. And here we look at both culture and agility. Only 1 in 5 businesses feel their infrastructure and culture are sufficiently agile. Companies are therefore seeking to become more agile, learning a lesson from the crisis where agile companies have proven to be more resilient. And the importance of treating employees well. More than a quarter of respondents said that building a culture to support retention and recruitment was key for future uncertainty. And new ways of working have appeared to enable this cultural change, and we can see that today with this conference. The data suggests we're at an inflection point, with workplaces reimagined through flexible and remote working to become more commonplace. And in that respect, there have been more flexible arrangements in 69% of cases, and remote working is becoming standard in 37% of cases. I've actually not been physically in an HSBC office for 7 months now, and video conferencing Zoom has been the norm. Now, this leads to a diminishing real estate occupation, where 38% of businesses are rethinking their physical office footprint and their production locations, with 29% expecting to reduce office space. And there's also been more flexibility with working arrangements. Over 2/3 believe flexible working will become standard practice, and over 1/3 expect to cut air travel. So when we look at agility, agile businesses place more weight on certain characteristics of resilience, particularly staying aligned to their core purpose, supporting a culture of innovation, and having a culture that is inclusive. So next slide, please. So here we look at sustainability, and I referenced that at the start, and it's a really fascinating insight. It's clear that sustainability will shape the recovery and enhance future resilience. So far from being a nice to have in good times, sustainability is integral to how businesses operate. 85% of businesses surveyed see environmental sustainability as a priority. And businesses who felt well prepared for the pandemic placed greater emphasis on sustainability. They also understand sustainability to be far more wide-ranging than those who were less prepared. And there's unanimous commitment amongst business leaders and decision makers to build back better. 91% agree the need to reassess or review their operations, and that will enable them to rebuild their businesses on a firmer environmental foundation. Now, beyond control, companies are seeking supply chain transparency. And planned changes in the next 1 to 2 years include increasing transparency in how their suppliers work, creating a more traceable supply chain, and that's 26% of cases. And it will not surprise you to see the pressure to become more sustainability is coming from all quarters, from customers, from government, and from employees. Next slide, please. So technology. Now, the greater the impact of COVID-19 on a business, the more technology is seen as vital for business continuity. For some, the shift to remote working exposed weaknesses in their continuity preparations. with fewer than 3 in 5 saying they prioritize investment in technology to improve operational resilience over the last 2 years. And technology will be critical. 6 in 10 think virtual collaboration will become standard practice over the next 2 years, with nearly the same number saying that virtual meetings, internal and external, are here to stay even after lockdown measures are cancelled. Now, HSBC's Navigator report in 2019, which is entitled Made for the Future, highlighted a trend of increasing investment as companies adopt new technology to improve productivity. And this year's survey shows future technology investment is balanced between automation and human factors to enable agility, to shape culture, and to promote collaboration. 33% of respondents saw technology investment geared towards workforce productivity, 31% towards improving communications, and 23% towards innovation. And the most resilient firms are looking to invest now in innovation rather than cut cost. And next slide, please. So this plays to supply chains, and it's the final slide. We look at how supply chains are undergoing fundamental change, and the view that COVID-19 will only accelerate retrenchment and deglobalization, and that appears to be premature. So we're seeing signs of vertical and horizontal integration ahead, but firms are not turning inward. 1 in 5 are looking to expand suppliers within their region as a strategy to grow. And the data shows steady investment in automation. This may see supply chains shortened to to operate on a more regional basis. In this regard, 2 in 3 businesses are seeking greater control over their supply chain. And 3 in 10 want to diversify their supply chain and to work with more partners, with a quarter wanting to work with businesses in markets that are more stable. And here the importance of digital processing of automation and digital payment processes is increasingly important. And worthy of note is that 1/3 of businesses plan to restrict or shorten their supply chains to reduce risk. Here production is moving closer to the point of sale, and that's a medium-term trend aided by advances in robotics, AI, and 3D printing. And together these steps mitigate the risks of one company or country being cut off by having a more sustainable and more dynamic supply chain. So that's it. The next 2 slides deal with all of our disclaimers. So in summary, businesses have faced and are facing the greatest challenge in a generation, but they are building back better. They are more agile, they're more resilient, they're more sustainable, they're more technology-led, and have even more of a focus on the importance of relationships with customers, suppliers, and employees. So I wish you well with your business. I hope you're able to successfully navigate the challenges and the opportunities. And as I said, we're currently finalizing our 2020 survey, and we'll make sure you receive a copy. And that will give the latest insight from around 10,000 businesses globally that we survey. So back to you, Joe.
Thanks a lot for that. A lot of very interesting trends and facts at an enterprise level, which is obviously very interesting for our participants. The participants of these kind of webinars would typically be, owner managers and executives and business leaders here in Malta. So a lot of stuff there that came out of the survey, which I'd like to discuss. However, I wanted to start with a macroeconomic, question. One of your slides was on the forecast for Europe and other regions in the world. In terms of potential GDP and other economic growth in general. I'd like to introduce JP to this, both to comment on the slide itself, but also to contextualize it a little bit in Malta. What are we expecting in Malta, given what has happened and what is likely to continue happening in the next few months?
Yes, so thanks, Joe. Very interesting presentation, and I think there are a number of lessons as well, not only from the corporate world, but also on the national, on the macro level for us to take home. What is definitely very clear is that all forecasts are showing the uncertain environment that we're operating in, right? So a lot of the forecasts are painting a highly volatile situation, although we are seeing that recovery is going to start next year. There are a lot of factors that are coming into play. For example, the vaccination programs, what's going to happen in other countries as well. So the pandemic has shown how interrelated and how connected the global economy is. So even if we've seen the development of forecasts, multiple forecasts over the past few months, we've seen changing numbers and also the degree of the rebound. So the latest forecasts, even for Malta's economy, are now showing a more subdued rebound or recovery next year, which is also lower than the European average. And this shows that Malta's economy usually follows a lag. Why? Because we are a very open economy, depend a lot on our international trading partners, and because we have a high dependency on tourism. So next year, although we're expecting activity to start increasing even from the tourism side, it's going to take longer than other industries to fully recover. There is good news in terms of the vaccination program, but this will take its time. If we then look at 2 years from now, Malta's economy will be growing at a faster pace than the European one. So even here, it's important to talk about the resilience, the building back better as well of our own national economy. We have seen, I'd like to call it this phase as a great reset, right, on an economic level. Why? Because a lot of countries have now been stalled economically and have had the time to actually introduce economic reforms that will build national resilience for the coming years. And it is very critical for Malta to now look at 3 main pillars, being productivity, competitiveness, and attractiveness. Right? So we've had the benefit of this stalling period, so to speak. Let's make the most of this crisis to make sure that we really focus on things that matter, that we not only help our own companies to become resilient to future changes, but to build back better in the sense of internalizing technology, digitalization, new markets, looking at the cost base. So I think here what we're looking at is a very important time, critical time for countries to actually support businesses in this transition. And as much as we want to build corporate resilience, we also have to build national resilience, continue ensuring that our economy is well diversified, and also in the new trade landscape, because one particular point is supply chain, right? And I think supply chains can actually find a niche for Malta's manufacturing sector. Because as we've seen also from the companies surveyed, the rise of 3D printing, additive manufacturing, technology robotized is actually bringing back supply chains closer to home markets. Why? Because European manufacturers do want to reduce the risk of fragmented supply chains. What happened this year has shown the high risk of having a fragmented supply chain. So even here, Malta and manufacturing entities in Malta should be really helped, aided, supported to ensure that we are embracing the so-called Industry 4.0. So additive manufacturing, 3D printing, robotics, automation. And this will help European manufacturers have competitive manufacturing bases closer to the markets.
This is really interesting, JP. I had a couple of questions on supply chain for later, but maybe we should tackle them now, because as you're saying, the fragmentation and the changes in supply chain are likely to mean, new opportunities for nearshoring. I'm not sure, Warwick, if you agree with this or if this is something that you feel that the report kind of concluded, this new possibilities for nearshoring.
Yeah, I think that's true, and particularly in an island economy like Malta. But I mean, Joyce will be able to comment on that even more. But as JP said, I think the report very clearly shows the criticality of having a robust supply chain, understanding all of the linkages, and having diversification there as well. So you're not reliant on one particular source etc. So I think the report very clearly shows, and again, this was a few months ago, but I really don't think it's changed, that the assessment of that supply chain, understanding the risks, looking to trade and have partners in countries that are stable, and naturally that are closer to home as well. Those are all key considerations for businesses. And whether that involves sort of bringing elements of the supply chain back on island, again, that'll be for a local view, but definitely having more control, more transparency is critical.
Warwick, I want to kind of move to on an organizational level this time. What do you think, has the pandemic done to the, basic elements of organizational management that kind of clearly come out in some of your slides?
I think there's been a fundamental reset, as we've said. Now, I talked about a few things, but office locations and production. I referenced that I'm working from home, as are many millions globally, and 37% of businesses expect that to become the norm in the next 2 years. So, one fundamental change in organizational management is office and production locations, the number of desks they need, etc., etc. But it's also accelerating the use and adoption of technology in terms of how businesses operate and the way they interact with their customers. So a conference over Zoom, doing business with a counterparty over Zoom or via Teams has become the norm and has become accepted as a way of doing business. And I do fully believe and appreciate the value of face-to-face interaction as well, but that's just not been possible. And I think there's been a shift there that will be with us for many, many years to come. We've referenced sort of the supply chain piece to make sure that products and shipments can be maintained. But we also mustn't overlook people and the importance of culture, and making sure that businesses, large or small, have the right culture in place to make sure their employees are resilient, the employees are able to make decisions quickly, and that they're supported by technology. So I think there's been a fundamental shift across every aspect of the operating model, but those are the key points that I would bring out, Joe.
Thanks, Warwick. Joyce, I'd like to introduce you to this discussion. These changes that Warwick is talking about, have you noticed them in Malta? Are we kind of part of the same kind of set of trends, or is it a bit different?
Yeah, I think as we've said before, the world has become more connected. So whatever is happening in other countries, and while the survey itself didn't really speak to Maltese businesses, but they're subject to the same challenges and the same issues for sure. So we've seen a lot of businesses reacting to the pandemic. Some better than others, I have to say. And that will define who will be the losers and the winners out of the pandemic, because the world has changed forever. I think one of the things that we saw perhaps at the start was that people were expecting this to go away very quickly and for the world to go back to normal, and wouldn't we all just love that? But here we are 8 months in, and there's no sign of the pandemic going away. So the winners will be those who looked at the opportunities that the pandemic presented. And we had actually customers and companies that we're aware of that changed, for example, their manufacturing and adapted it to start manufacturing PPE, which they never did before, but they managed to get new contracts in that way, and it made up for the loss of business from other areas. I think, though, the major change that I've seen, both from my professional interactions and also as a consumer, because we're all consumers here, has been in retail, which, as Warwick said, was one of the most heavily impacted sectors by the pandemic, as expected, because it's human interaction after all. And what we've seen there is that some companies were very well prepared because they had the culture which Warwick referenced and which we'll definitely reference many times today, that they were already prepared for it. They had their website, it was working, they had to make some tweaks, and they capitalized on it, and they managed to get in first. Others were a bit more reactive. Perhaps they didn't have the capability. And as we've seen from the survey, not everybody was sufficiently prepared for it. But one thing which is really, really important in the retail space, I think, is that there will be a change in consumer preferences. And the pandemic has been a catalyst of that. And people, once they find certain new ways of doing things, they might not want to go back because it's more suitable for them. It's just as good, gives them more opportunity to view various products before taking an acquisition decision. People assume that everybody enjoys shopping. Not everybody does. I'm a person who doesn't like shopping personally. So I expect retailers to change so that they adapt to consumer preferences as well in the future. And that will define the winners for me. So we've seen a lot of that, but more to come for sure.
Great. Warwick, on another point, in the report, in the survey, about 62% of companies are not developing business kind of with their present clients, but actually pursuing new business, even though, they can't travel. And there are a lot of restrictions to developing new businesses. A lot still do that, however. Does this surprise you? And, what are companies doing to actually generate new leads in such an environment?
Yeah, I think it was again a really interesting point from the survey, and really incredible that in late April, May, 62% of companies were pursuing new business prospects. They had to deal with the pandemic and their business operation, and then quickly turn their mind to how they're going to generate business. And getting out there and not being able to physically meet new clients, not being able to get on a plane and travel, but finding a way through that was really, really impressive. And I've certainly seen that across Europe with a lot of the companies that we deal with. So that really bodes very well for the future. So I'm not surprised by it, but I'm very impressed by it and the resilience and the entrepreneurism that has shown. And as I said earlier, 82% of companies feel closer to their customers, and it's very encouraging to see businesses therefore focus on existing customers and also new prospects. And it's also, as Joyce has referenced, it's looking at new lines of business as well. Looking at the infrastructure that a business has, whether they're large or small, and trying to see opportunities there, either to cross-sell into existing customers or to actually find new markets, which is what many businesses have done. I think the piece around, and again, this plays to an island economy, a change in air travel, from a business perspective, not expecting to jump on a plane in order to win new business, using video conferencing and other media as a way to do business. The world is actually a very small place. And as we've said, we are very interconnected as well. So I think those firms, those companies, those businesses, large or small, that are able to navigate this and find access to new customer channels through whatever medium they can, is really critical, and it's certainly something we saw from the report.
On the same point of this entrepreneurial drive to develop new business in spite of the challenges that obviously happening at the moment, TradeMalta incidentally recently commissioned a report that came up with very similar results. A lot of companies that we've surveyed are also pursuing new business as against kind of trying to drum up business with the same clients. And this is kind of the Malta situation. Joyce, from your experience, would this surprise you that companies actually try to pursue new businesses in spite of what's happening out there and the difficulties? Or is it like Warwick is saying, not a surprise?
I must agree with Warwick on this one as well, because I don't find it surprising at all. Let's not forget that this is not the first time that Maltese companies, big and small, have had to adapt. And I remember cases where companies lost their major buyer, their major customer, and they had to adapt. They had to diversify their customer base, and they could only do that because they were resilient and they were focused on getting new business. So it's not the first time that Maltese businesses have faced a threat. So Not at all. Even in the current environment, there are various ways of finding new customers and really tapping into the opportunities. But again, it's all down to culture. So if a company has a strategy of diversification of its customer base, then it's really key that it focuses on that, and it allows it to have more resilience and more agility should there be an issue with one of their buyers, whether it be because of pandemic or whether it be because of other issues. The world is going to become an ever more challenging place, I think, and more competitive. So people need to have those inbuilt strategies to adapt more quickly.
On these strategies, and essentially, I'd like to introduce JP on the issue of, because Joyce mentioned before that actually people maybe thought before and at the start of the pandemic that this is going to be a short-term thing and it will be over soon, and obviously it's not. Have you seen a change in how companies, from your interactions with companies, how companies, adopt their strategy from the beginning of the pandemic to now, that it seems to be a bit of a long-term thing?
Yes, in fact, at the onset, it was very clear that there are going to be three main phases to a company's reaction. The first one was the issue of survival, right? So they took the direct hit, decline in revenues, orders coming ahead, especially those related in tourism, hospitality, and all of that. So you had a first rush to make sure that the business can survive in the immediate term. Then there was a phase, and I think we're still in it, of stabilization. And I think it's this phase which is actually taking longer than expected. Why? Because no one expected that we're still going to start the new year but have this uncertainty of if the pandemic is still around, lockdowns. Now we're already hearing the third wave in Europe post-Christmas, right? So this stabilization phase is going to be critical. And here I think it's the strategic direction that firms will take in this phase to ensure that the third phase, which is succeeding in a new normal, will actually take off. And I think here is the board and the executive management, the C-level, are going to be critical on a number of elements on how they position the company moving forward. What is going to be critical is as well the cash management before the crisis. And I think this is going to be a lesson for a number of businesses going forward. Cash management, treasury management, optimizing your financing, making sure that you're resilient as well to changing conditions. So gearing, leveraging, these are all going to be contributing to the winners and losers next year. So I think 2021 is going to be very, very critical also because moratorial loans will start being tapered off. So over there we're going to see now the true health, the true sustainability of corporates. So as well, in this stabilization phase, because necessity is the mother of all inventions at the end of the day, we have to see how we're going to support companies in their transition, but also to actually start looking at new markets, new business models as well, right? Because we also have the emergence, which was already here, but I think now it has accelerated, the new type of economic model, which is the platform economy. So how is that going to change traditional retail shops? Are we going to see retail shops becoming more showrooms, but and then the conversion is going to move to online channels? Are people going to go to retail stores to actually see products, test them, but and then conversion is done at the comfort of their home? But and then if the conversion is going to be done at home, do we have the whole ecosystem to support that platform economy? Transportation, logistics, delivery, the last mile delivery, payment services online, right? So there are lots of factors of play, and this is where I think an alignment between corporate goals and national goals and strategies and the whole ecosystem development is going to be critical for not only the country, but even more so for the individual companies to flourish in the new normal.
I'm glad you mentioned the financing issue. Warwick, one of the things that came out very, very clearly in the report, I think 37% or so of companies saying they need new financing solutions. Is this because of the lack of demand and the impact on cash flow, or is there a more, substantial reason why, we need new financing solutions at various levels?
Yeah, Joe, I think it's true, and again, the report was early May at the height of the pandemic, and I think at that stage it was the decrease in demand, as you said, and the impact on cash flow. I can certainly talk to companies I interacted with across Europe. Joyce can talk to what she saw in Malta, but there was significant demand for loan facilities, for moratorium on loans, as JP has mentioned, in order just to survive. Some companies who had reserve facilities, revolving credit facilities, drew down on those in the short term just to provide some padding for their working capital need. But that eased and has eased, and the demand we're seeing has reduced significantly. So there's been that period of stabilization, but initially, yes, it was about access to funding to make sure that firms had enough resilience, and it was to fund potential trading losses in many ways, and just to survive. And of course, lots of governments around the world, and I know the government in Malta did the same, focused on government lending schemes, and the banks supported those where they were able to, and I think that was very important as well, to provide access to facilities for companies during times when their cash flow was stressed. But we have returned to more of a normalized situation. It will be interesting as we move into 2021 as well, but I think this is something companies have been very focused on. So thinking about the tenor of their facilities, where they have a revolving credit facility, making sure that the maturity is sensible, that it's well spread, the covenants are suitable, etc. Those are all the things that companies have been doing. But they've also been looking at digital offerings, ways to leverage technology and increase the speed with which they can execute transactions. So, for example, in the trade financing space, we started to see blockchain transactions starting to emerge, building security of the contract, but also to speed the transaction through, again, to drive cash flow and to bring sale to cash within a company's account much more in a speedier way. So we've seen lots of that, but I think it has eased. I don't know whether Joyce has got a view on that.
Yeah, both on that, Joyce, perhaps, and on new kind of financing, solutions like Warwick is mentioning, the speed, these transaction technologies.
Yes, I think in Malta, as Warwick said, like other countries, we've had very similar requests. I mean, some of the companies have very high cash burn because of the expenses that they run, and they weren't getting the revenue that they normally do. Plus, they had additional expenses, either to look for new opportunities or to develop new products. So we've had quite a bit of demand for such short-term funding, well, actually longer term or medium term funding, but to fill the gaps that they've had in their cash flows, which we've been happy to provide wherever we could, of course, because that supports the economy. But moving forward, the funding of the trade in particular, that's something that's key for us, and we have the right products to be able to support the customers as they grow in this new world.
JP, are you aware of new financing solutions to companies looking at internationalization?
I think that there's going to be a change in landscape as well, most probably even if we start looking at next year. So definitely if we're looking at your traditional types of financing, I think in Europe, also in Malta, development banks are going to play an important role as well to support the riskier environment, right? Because now we also need to look at the macro conditions of banks, what's going to happen, their capital buffers, especially if there's going to be an increased rate of defaults or impairments on loans. So their development banks will play a key role to also support a much needed investment in innovation. So that's going to be key. I also believe that private equity as well, because ultimately there's a lot of, some companies are sitting on either reserves of cash. So over there we can see distressed assets and then that vehicle coming in. Capital markets as well. Malta, where we have a big liquidity in terms of, you see the banks deposits, they have, spiraled to record levels. So over there can be some leverage over there. But I think going forward, also as Warwick mentioned, the use of blockchain, there might be as well an increased element of fungibility of assets, right? So ensuring that the digitalization of assets, fractional ownership for companies to actually monetize on assets through security tokens and all of that. So I'm seeing a lot of research coming out in terms of the securitization element, the use of digital technologies to support capital raising and financing of assets.
Great. I wanted to, shift the discussion a bit from all this, financing and these, complicated solutions to culture, because this is really central to the report. Before we do that, however, I want to remind our participants, we have questions coming in already. Please send us questions on the chat function of Microsoft Teams, and in the next 10 to 15 minutes, we'll be able to take these questions and pose them to our guests, both Warwick, who's in London, and our guests here in the studio. Back to culture, Warwick, very, very central to the report is this finding that culture seems to be, the solution to everything. But, what is culture? This is, it's easy to be a bit skeptical towards, this very generic kind of, label.
Yeah, I'm not sure we've got enough time to go into the answer, what is culture, or I don't think I'm sufficiently equipped to answer that. But there's definitely a very clear output that culture is important. And I think the thing, Joe, that really caught my eye was this piece around agility. Now, clearly that means different things to different companies and to different people. Millennials will have a different view on agility than maybe I will. But being able to make decisions quickly, making sure that you understand exactly what is happening at every layer within a business, whether you're large or small, not being wedded to traditional practices, traditional ways of doing things. And I think one thing the pandemic really taught us, certainly in the early months, was how quickly businesses were able to adapt. Now, if you're in a service business, working from home, as say, became the norm, and that was an incredible effort in order to do that from a IT perspective, from a human level as well. But I think that agility, the ability to make decisions, undertake a risk assessment of a situation, and to do something quickly, as opposed to following a more traditional route and going through various levels of hierarchy. I think that is one of the things that really underpins, for me, the culture within businesses that has come out of COVID. And I think employees also, whilst the employment market is less favourable from an employee perspective, employees still do have choices. Talented people still do have choices. So making sure the environment is right, making sure people feel included. People have got used to working from home as well. So having a policy which is flexible enough to recognise that, even in Malta, I suspect, rather than going into an office, there will be an enduring culture of people working from from home, and we've certainly seen that in other island locations. So I think this agility piece, listening to your people, reducing the hierarchy where you can, and having a culture which is inclusive is really important.
This bit on agility and the possibility to kind of attract and retain talent came out clearly also in the report. I'm not sure, has the situation in Malta changed because of the pandemic in our ability to attract people, to retain, talent?
Yes, I think it has in a way. I think retention is needs to be first of all ingrained in the culture of the organization. And I like the description of culture that I always have in my head. And it's very simple, but probably very simplistic. To me, it is the way we do things around here. So perhaps oversimplistic, but when you think about it, it's the way we do things around here. And locally, I think it's no different to other countries. Perhaps remote working was a bit bizarre for Malta because of our distances, but it's become very important now. The retention piece, I think, when you allow certain technologies, it does help the retention. People, as Warwick said, still have opportunities, even if unemployment might tick up during the pandemic, and we expect it to. There will still be people who want to pursue opportunities elsewhere, or they're not happy in the organization. So having the technology is all well and good, but how you use that technology for me is really key. And for us, closer to home, which is where I operate, we've had over 90% of my team in commercial banking have been working from home pretty much throughout the last 8 months, and now it's still around 85%. So during that period, if we were focused only on getting things done, but rather than being face-to-face, doing it on Zoom or on Teams or whatever, I think you would lose the sense of collaboration. You would lose the sense of people belonging to an organization, and people would still feel left out. So adapting and using the technology to interact more with people more regularly. We have more regular team meetings just for the sake of having people coming together and discussing the issues that they might have, because you lose all the opportunities that you have in the office of that discussion at over a coffee or on your way from one desk to another. You bump into someone, you can talk over a problem. That's been lost completely. So you need to be mindful of that. And I was pleased to hear Warwick mention diversity, because both of us are very strong supporters of diversity. I think you need to be mindful of retaining and building more diversity into the teams, because that's how you understand stuff, you understand different things that drive different people, and having more retention then of your people by being more mindful of that.
Yeah. JP, what are the next kind of HR practices to continue on the subject that Joyce picked up now?
Yes, I think there's one point on culture. I think what really defined this is making sure that culture moved away from a policy statement to actually having the processes supporting that, right? So if you had companies used to say that they have a flexibility policy, but then did not have the right tools, processes in place to operate remotely, then there was obviously quite a break and fragmentation over there. I think what's definitely going to be a main driver now going forward in HR is not only inclusivity, but I also think there's an element of empathy as well. Why? Because people are getting a bit burnt out working from home. And even latest statistics in Malta have shown mental health to be quite a pressing issue, and I think this is going to be an issue going forward as well. So I think leaders now need to not only open up their hands to actually get on with the work, but also their hearts in terms of making sure that the workplace and leadership teams show empathy towards situations, especially, I would say, from a gender perspective. Why? Because unfortunately, it's the way societies are. A lot of burdens and daily, so to speak, struggles, especially with homeschooling and all of that, have actually burdened the female a bit more in juggling work commitments, remote working, meetings online, trying to keep up with the kids and all of that. So I think this element of engendering gender properly, the proper work-life balance as well, but also showing empathy and flexibility. I think that is going to be crucial to make sure that career paths are not damaged, but actually people can thrive on the merit of their own successes and qualifications.
Away from the people argument, one surprising to me at least finding in the report was related to kind of the green economy. A high percentage, I don't remember exactly, of respondents saying they're actually, they have customers now who are demanding, sustainability practices from companies. This is the case, but is this the case, in certain parts perhaps of Europe, Warwick, and in certain companies only, or is it, prevailing across the sample?
Yeah, I think it's prevailing, and it is a fascinating point, and you almost feel that we're at an inflection point, really, because it would be quite easy to, having been in a pandemic and coming out of it, to not focus on this area. But 91% of businesses that we surveyed believed that was critical to their success. And I think the pandemic also is a stark reminder that our well-being is tied to the health of the planet as well. So I think we're at an inflection point. That's what I read from the report, and certainly the view that I take over recent months, and certainly the view from HSBC, is that we're at that stage. So quite simply, unless businesses build sustainable practices into their operating model, they will start to lose competitive advantage, because employees demand it, customers demand it as well, and increasingly society and government demands it of them as well. So there is sort of no choice to do that.
Exactly.
So looking at supply chains, increasing the transparency with which how they work with their suppliers, and getting assurances there. That's all part of the supply chain piece, and making sure that they have a traceable supply chain as well. But fundamentally, looking at the business decisions and making sure that sustainability, the well-being of the planet, is part of that decision-making process, I believe is here to stay. That's an incredibly positive thing, and possibly a little surprising from the report, but really, really positive.
Absolutely. Before we take questions, perhaps JP or Joyce, any concluding remarks on the report itself before we take questions from participants?
I think the main take home is for companies to actually start looking at the resilience beyond the pandemic, make sure that risk management, so your enterprise risk management, business continuity plans are all in place, making sure that you're embracing the latest technology, so not only transform your business model, but actually to use that to innovate processes, production methods, which and then can be used to penetrate new markets. At the end of the day, crises come, crises go. It's not the first, it won't be the last. We continue living in a volatile, complex, and uncertain environment. COVID will definitely start tapering off with the vaccine, but the risk for another global pandemic remains. Sustainability risks remain. Climate change continues to be one of the main threatening factors that humankind faces. So I think it's a question of really sitting down, internalizing everything that has happened to actually reset the button and build back better.
Joyce, any comments there?
Yeah, very similar to JP. I think for me, it's interesting how important resilience has been in this pandemic, and it will be for future crises that the world will face, not may face, but definitely will face, and the importance of looking beyond and just planning ahead for what might happen. And I think some companies need to look a bit inward and acknowledge that they might have gaps, for example, in their governance, and where you don't have certain specialization within your existing board, try to bring that in. And I've seen that in the past, where companies where family companies, perhaps smaller companies, brought in expertise they didn't have, just because they made that analysis and they were humble, if you can
Open
say,
enough.
enough and sufficiently aware that they needed certain skills brought in, and why not? I think that will really define and make the distinction between those that fail and those that succeed as we move forward.
Thanks, Joyce. We have some questions from participants. So as I said before, what I'll do is I'll read the question and then, pose it to whoever wants to tackle it. The first one is, 37% say remote, 37% of respondents, I guess, say remote working will be the norm in just 2 years. What implication will this have on the economy in general, and is this trend an opportunity for banks? Warwick, would you like to start?
So, yes, I think that is a finding, and we've talked about it. I think it's not per se for banks, but I think all businesses just looking at their infrastructure needs, whether that's office location or production facilities, etc. And I think everything points to needing less desk space, which obviously has implications for the real estate sector as well. But still a need for flexible, agile working conditions and office environments. So I think there's definitely a sort of an implication there to consider. I think also very practically, a working from home setup for people in the service industry. I was only talking to some colleagues yesterday about things like health and safety and responsibilities of the employer, even though an individual is working from home. So I think there's a whole risk assessment piece there that businesses large and small need to undertake to make sure that the working conditions for their people are suitable at home, and what can they do about that in order to support it as well. So I think there has been a fundamental shift. It links into the culture piece and what individuals need, but I think definitely pointing to less office space from a production perspective. It's obviously a bit more of a delicate balance, because shortening supply chains and bringing production locally obviously would increase the need for space and capability, but the investment in automation, 3D printing, robotics, etc., is the reverse of that in many ways. So I think there's a lot for businesses to think about and to digest. But the world of 9 months ago has gone. It is a new world that we're in, and every business is having to make these decisions and make choices. And I think, as Joyce has referenced, particularly for small businesses, the need to take advice, to think broadly, to take counsel, and that's where I'm sure on Malta the various and very strong business support agencies that are there to help businesses make the right decision for the future, and that is going to be critical.
Great. Anyone else wants to take the question, a comment on remote working and whether that's an opportunity and provides new opportunities?
I think it also calls for the transformation of the the real estate office environment as well. So we're going to see definitely an increased demand for co-working facilities and hot desking. So, and then also on a national level, I think planning and permitting needs to really follow now a newly shaped demand and supply model to ensure that we don't have excess supply of office space coming forward, just to ensure the sustainability of the developers and companies behind that as well.
I'll take another question. 80% in the survey, again, I assume, have become closer to suppliers due to the pandemic. Can this mean new suppliers will now find it harder to be given a chance and kind of penetrate in a supplier-buyer relationship, I imagine? Warwick, perhaps first? Will it be more difficult for new suppliers to penetrate now?
In some ways, yes, but as we've said, the world is a small place. So rather than, and I think culturally things have changed as well. So rather than the traditional way of building a business relationship, perhaps over many meetings, a number of flights, lunches and dinners, and so on and so forth, there's a much more agile way to doing business now that actually makes it very easy for businesses to start relationships with new suppliers. Now, clearly, there's a need to make sure that you do your due diligence and to really sort of ensure that you're comfortable. But we're seeing a lot of business activity in the M&A space. It hasn't stopped M&A activity. And it's exactly the same with supplier relationships as well. So I think doing due diligence is important on both sides and finding different ways of doing that. But in many ways, I think the speed with which you can build a new supplier relationship from start to finish, the expectations there have changed. And we've seen that throughout the pandemic with the way that businesses have operated in an agile way in order to operate in new markets and to build new suppliers as well. So I think it's balanced, but I would say, probably just in favor of actually easier for suppliers to build new relationships and to reduce the time that it takes to win new business.
Okay, I'll move on to more questions because we have more questions coming in. Companies are spending more time on short-term planning. We have a participant saying, which is understandable during the crisis, of course, but will this mean the end of long-term planning for companies? I wanted kind of JP to take this first, and maybe perhaps Joyce,
Sure.
and I will go to Warwick this time.
No, I think, and in fact, one of the results referenced this, right? Yes, there's an element of firefighting, but I think it will be a big mistake for companies to forget sight or lose sight of the long term. It is true that the long term is going to be different to what we know. However, I think that it's going to be the emergence of more scenario planning rather than just long-term planning. And I think this also, I mean, even if we look at management theory in the 80s, whereby we were facing a number of crises internationally as well, that saw the emergence of scenario planning. And I think this is something that firms have to really start internalizing, to also start considering the different phases and possibilities of a recovery. How slow is the recovery going to be? How slow the rebound is going to be? What portion of your sales are going to remain online and how much of it is going to remain in store if you're in retail? Tourism, what's going to happen if only 2 markets open up, but your main market will take longer? So I think the elements of scenarios is going to be more important than the actual long-term planning.
Joyce, is long-term planning dead or?
By no means can you say that long-term planning is dead. I think that would be a huge mistake for people to make. I think it's important to have long-term planning because you need to have a direction. You need to set the direction for your people to know. Because if you have only short-term planning, how are you going to communicate the ultimate goal and what the company stands for to your people? It's just impossible. So you need to have the long-term plans, but keep maintain flexibility within the organization, flexibility and agility, which we mentioned. I think those will be key in the future, and not only in businesses, even for us as individuals, as we pursue careers. You need to maintain flexibility and agility, because the role that you thought, you're always asked, where do you see yourself in 5 years' time? Well, where I see myself in 5 years' time depends a lot on the world, how it's going to be in 5 years' time, because the job that I was planning and that I was preparing myself for will not exist more than likely in 5 years' time. So maintaining that agility within the organization, I think, is going to be key.
Warwick, long-term planning or short-term scenarios, what's your take on it?
I agree with both Joyce and JP. I think long-term planning is really important. You need to have a very clear business vision and goal. For larger businesses, investors absolutely demand it. They need to buy the story and analyze and understand that. But I think, as JP said, the sort of scenario planning, there are different ways of getting there. We don't know how quickly the recovery will take, and we don't know what is going to happen in the future. So being agile, having business plan A, B, C, D to get to the end result, and being able to operate in an agile way to get there is important. And within that, as we said, the importance of culture, listening to your people, having daily, weekly virtual team meetings or face-to-face team meetings, and really listening to what's going on the ground, so you can make sure you're making the right decisions and setting the right course for the company. But I think it is the scenario piece, as we said, but every business needs a plan, and the sort of the most important, the longer term business decisions need to be anchored to that plan. So I think both.
Yeah. I'll take another question, an interesting one. The more companies were impacted by COVID, it seems from the survey, the more people believe in technology. Can this mean we're creating a simplistic impression that technology is the answer to all challenges? Warwick, I thought I'll challenge you with this one.
Yeah, no, it's not. But I think the importance of technology is something that comes out. There's a cost play here, clearly, as businesses need to be even more competitive in the future. But also there's a speed of doing business. There's an ease of doing business. There's trying to make things seamless for the consumer. So like Joyce, I don't like shopping. Everything is online now, and I will get very tired if I can't quickly click between a site, make choices, and make my purchases. So I think technology needs to just underpin the strategy of the business, but most important is the culture of the business, the way that it operates. As Joyce says that the way we do things around here, having the right people, having talented people. I think it would be a mistake to focus entirely on technology and to turn your eye away from the most important thing in most businesses, which is the human capital that sits within it.
Yeah. Anyone agrees or disagrees with this, JP?
Yeah, and I think we also need to make a distinction between a means and end, right? Technology is not an end in itself, but the end remains customer satisfaction, shareholder value, enterprise value. Technology helps you get there. And what is very, very critical as well for companies is to make sure that the processes also change as a result of technology. You can't just implant a technology over old practices or processes. So if you're going into e-commerce, then your warehousing inventory needs to be aligned as well to that. Your payment systems as well, right? So the same with governments. If we're talking about e-government, it's not about filling a form online, but it's also making sure that your back end, your processes your RBAs and all of that are attuned to that. So as Warwick said, it's about culture, it's about processes. Technology is just a means to an end.
Let's see if we have more questions from participants before we round up this discussion. We have a question on culture, which I believe we've tackled already, so I'm not taking that. Another one, the survey found that at least a third of companies want to find new ways of retaining employees and attracting new ones as a pillar of resilience. Is it easy to attract and retain the right people in the current economic climate? I believe we've kind of tackled that. Yes. So I'm moving on that one as well. Another one says, as uncertainty becomes the new normal, companies seem to be keen to adopt new practices. The report found that agility in decision-making, for example, flattening of organization structures, and using technology are key to future resilience. Why is this also important for SMEs? Interesting. Warwick, perhaps.
I think it's, I'm glad this has come out, because I think you would think that, certainly SMEs have had a real competitive advantage, because by size, they would naturally be able to be more agile. And that's what entrepreneurship is about, making quick decisions, being able to identify gaps in a market and pursue opportunities and make things happen really quickly. But I think throughout the pandemic, what we're seeing is larger businesses are finding ways of doing that as well. And increasingly, able to make decisions more quickly and to identify new markets and new opportunities. So it's not the preserve just of the SME. And I think therein lies a risk of complacency. So I think SMEs absolutely need to, would be well advised to look at themselves, to look at the way they operate, look at how decision making occurs, look at their strategy, their short term, their long term, and to make sure they're taking wide counsel and not to be complacent, because we can all do things better, we can all do things faster. But I think the gap between sort of large and small has reduced as a result of this pandemic, and larger companies have had, to a degree, a wake-up call, but they've responded very quickly to that and have now started to build that into their DNA and their operating model. That would be my view, but again, I don't know what Joyce and JP think.
I really have to agree with that, because I don't think it's a matter of size. I think it's a matter of the thinking within the organization and how decisions are made. So with a small company, or SMEs in particular, you tend to have one or two decision makers. So that suggests agility. But as Warwick said, then you could have the difficulty of not having sufficient expertise in a particular area, or sufficient time as well. Because if somebody's firefighting, how can you expect them to be looking, scanning the horizon, as it were? So you need to bring that in. But for larger organizations, then the challenges would be, because they have more structured way of doing things. The decision making might be by committee, for example. Committees tend to slow things down. So they need to have a different mindset into this, but there's no justification for a company not acting in an entrepreneurial manner just because of size, because you need to be aware of the constraints that you have and challenge yourself to do things differently if whatever it is not working or might not work in the future, because it doesn't have to be broken for you to fix it, in my view.
Yeah, thanks for that, Joyce. We're really kind of running out of time, but if JP wants to, pitch in on this one, because the next question we have from a participant is already anticipated by Joyce, because you mentioned, large companies and small companies. So that's great, JP. Unless you have something else.
One point I'd like to add, and marry something to what Joyce mentioned earlier. I think it's very critical as well for family businesses. With a lot of interactions that I am having, family businesses especially need to shore up the governance structures, decision making sure that succession plans are in place, because when a crisis hit and you're not ready for it, even internally, and then that is when the trouble really starts hitting the fan.
Before we round up, as you probably know, and with TradeMalta cooperates with HSBC a lot. This is, in fact, these series of webinars amongst the many initiatives we take with small companies, with companies in general in Malta, as TradeMalta, are supported by HSBC, our strategic partner. So I wanted to give the floor to Joyce for a couple of minutes to round up a little bit on this webinar and our relationship and what HSBC does in general, and we'll bring the webinar to an end just immediately after that.
Okay, so first of all, I'd like to thank the participants today and the people who have joined this webinar. I honestly hope that they have found this webinar and the series of webinars that we've done in the past few months interesting and useful for them. The relationship that we have with TradeMalta is a very important one for us, and it's a long-standing one. Last year, I was lucky enough to be one of the judges on the awards, the TradeMalta Awards, and that was super interesting because I got to see what Maltese companies can do, and it was fascinating. There were companies involved in film production from a small studio, and you see how a very basic filming becomes animated with different backgrounds, and you wouldn't believe that this was a Maltese company. We saw other Maltese companies that were expanding overseas and had built a very strong reputation for themselves, starting practically from nothing and from a very small operation, which nobody knows about in reality because they have no presence here in Malta, but all their market is overseas. And you get an appreciation that the Maltese entrepreneurial spirit is very, very strong. And that's why the relationship that we have with TradeMalta is so important to us, because it enables this entrepreneurial spirit, and it's something that we strongly believe in, because we're here ultimately to enable our customers to be to expand, particularly internationally. So the aims of the two organizations, of us and TradeMalta, are very matched. And I'd like to thank everyone again. And as a reminder, the Navigator report will have, it's available on our website as well. So the new one will also be available on our website when it does come out.
Joyce, thanks a lot for that. So
Thank
Joyce
you.
Gregg, who's head of commercial at HSBC in Malta, thanks for being with us today and for all the support you give TradeMalta in whatever we do. Thanks to JP Fabry from Seed Consultancy, and of course, thanks to Warwick Long, head of HSBC Commercial Global European, and UK on your part as well. This brings us to the end of this webinar and the end of this series. Just before we go, the webinars themselves are available on trademalta.org. We have interesting stuff coming up in the new year, 2021, in spite of all the things happening around us. So please follow us to see what's coming up in our support to companies interested in internationalization. Before I go, I'd like to thank our team led by our CEO, Anton Buttigieg, but also my colleagues, Richard, Christine, Josian, Klaus, and Ron. That's all from me, Joe Schembri, for now. We'll see you early next year. Thank you very much.